Good day, and thanks for joining us for a review of the May 2019 survey results of the Purdue CME Group Ag Economy Barometer. I'm Jim Mintert, Professor of Ag Economics and Director of the Center for Commercial Agriculture here at Purdue. And I'm going to go over the highlights of this month's survey results, but of course you can always get a complete copy of the report at our website, purdue.edu/agbarometer. This month's survey was conducted in mid-May, and I want you to know that that was before USDA made the announcement about the second round of trade disruption payments to U.S. farmers. So that impact was not captured in this month's survey. It will be reflected on next month's survey. This month, the Ag Economy Barometer took another sharp drop from 115 last month to 101. So that's 2 months in a row for a sharp decline in the Ag Economy Barometer. And the barometer decline was really driven by declines in both current conditions and the index of future expectations. Both of those indices dropped sharply this month. The index of future expectations and the index of current conditions both declined 15 points from a month earlier. So that's 2 months in a row that both of those indices have dropped pretty sharply as well. Periodically, we ask farmers whether they expect to see wealth to increase, stay the same, or actually decline over the next 12 months. And as you notice, looking at the data on the slide, in May, that changed rather dramatically. 55% of the respondents said they expect to see wealth decline in the next 12 months. That compares to 39% back in February and 35% a year ago. So farmers have become significantly more negative with respect to income and what's likely to take place with regard to their wealth. That translated also into some weakness in the large capital expenditure index, the large farm investment index, which declined again from a value of 48 a month ago to 37 in May. And that's the lowest reading we've had for that large farm investment index since we started collecting data in the fall of 2015 as farmers pull back on making capital expenditures on their farming operations. We also asked farmers about their expectations with respect to farmland values. We asked it both with respect to what they thought was likely to take place in the upcoming 12 months and also from a longer-term perspective. And notice when we asked farmers to look at what they thought was going to take place in the upcoming year, they've become increasingly negative going back to February, as that percentage of farmers expecting lower farmland values increased to 30% on the May survey from a low of 20% back in February. When we asked a similar question, but asking farmers to look out 5 years instead of 12 months, keep in mind that normally over longer periods of time, we expect to see farmland values increase. That's been true for many years. And so what's taken place there is the percentage of farmers expecting higher farmland values has been declining going back to last fall. Last fall, roughly 50% of the farmers in our survey expected to see higher farmland values over the next 5 years. On the May survey, that declined all the way to 39%. We continue to ask farmers about their perspective with respect to what's taken place with the trade dispute with China. The first question we ask, and have asked several times now, is do you expect to see the trade dispute be resolved by July 1? Back in March, 45% of the respondents said they expected to see it resolved by July 1. That declined in April, declined again here in May to just 20%. So farmers are becoming less optimistic that the trade dispute will be resolved quickly. We followed that question up by asking, do you think the trade dispute with China will ultimately be resolved in a way that benefits or is favorable to U.S. agriculture? And back in March, 77% of the respondents said they expected a favorable outcome. That declined somewhat in April to 71% and dropped again in May to 65%. So farmers are becoming less optimistic that the trade dispute will be resolved quickly, and they're also becoming less optimistic that the trade dispute will be resolved in a way that's really favorable to U.S. agriculture. That wraps up our discussion of this month's survey of the Ag Economy Barometer. We'll have the next survey results available in early July on July 2nd. And of course, you can always download the report from our website, purdue.edu/agbarometer, where we also have a complete set of the charts we use in the reports and on these videos. Thanks for joining us. On behalf of the Purdue Center for Commercial Agriculture, I'm Jim Mintert.